So today's trading takeout is going to be what is trading really? Because it's a really, really key question. And I think trading's not really defined. People just think, oh, yeah, it's just buying a line and selling something else, or thinking something's going to go down and then trying to sell it and buying it back. There's various definitions and ways in which people conceptualize what trading actually is. But I was in a discussion this morning on Twitter and we kind of got into it. And they were talking about macro kinds of trading and the misconceptions people have, because many people are saying, oh, yeah, we're having a recession, sell the market. And it's like, well, that's not really a trade idea. It's not really a construction. We're always going to get recessions and we're always going to get, bull markets. It's just a factor of existence. People get pessimistic sometimes, people get optimistic sometimes. So I tried to define macro, since that's my speciality. Because there's lots of people that talk about macro, but when it comes to actually putting it into practice, it's a different story. So my definition was, macro is incredibly easy until you ask them for a trade. Macro is not, this looks bad, let's sell it. Macro is more, what aren't people seeing in the midst of all of this chatter, and how much of a relative surprise could XY events or data be? And is it worth having a punt on it? Shouting recession is odiously boring, and you're just calling for the downfall of your society for reasons unbeknownst to me. Now, for me, I think that's a good way to conceptualize things. We're not just taking a pessimistic idea and thinking, all right, well, things are rubbish, let's sell it. We're thinking, in the context of everything else, how bad is this really? And is there a trade idea there, which, when you factor in the risk of taking the idea, there's adequate reward? Okay. And what's the best expression of this? Is it to trade it via, I don't know, an energy ETF? Is it best to trade it via FX? Depending on exactly what the construction is. And I think the perfect example of thinking like this is with the Euro CAD trade from yesterday. My view was that any kind of beat on the number, so any kind of Canadian inflation hardening, is going to be extremely detrimental to the euro, considering the differentials in yields. And that's all we're looking at. We're only looking at relative strength changes here with macro. And your job is to gauge how strong the signal is within the current context. That is how trading is defined to me. Relative strength of data and how much of a surprise it is versus what the consensus is. That is all it is. That is all trading is for me.